Hello, everybody, and welcome back to the M3 Melody Market Update. My name is Melody Wright, and I do this show to give you context about what's going on out there in the housing markets. And the housing market is very much impacted by credit quality and whether or not people can qualify for loans because besides investors, not many people today can actually afford to pay cash for a home unless you're one of our very rich boomers, our top 10%. So I have Amanda Goodall with us today. She has been out on X Twitter talking about impacts from these student loans which are now due again and reporting to credit for the first time in some time. And so we're going to talk to her about what she's seeing. And I'm just going to let her introduce herself. So Amanda, thank you so much for joining us today. Why don't you just give us a little bit, what's your background? How did you get here? And take as long as you want.
Yeah. Thanks for having me. This is awesome. For the last 20 years, I've been the job chick. I've been helping people with, their career paths, figuring it out, their resumes, and just everything. So I've seen all these different patterns throughout the years. I've actually advised a lot of different companies, helped build different ones as well. And, it's funny. I kind of fell into one. Somebody said, "Oh, you understand how to deal with people." I'm like, "I deal with a lot of them. I've written over 25,000 resumes. I've dealt with a lot of people." So they were like, "Can you come in and advise our credit company and work with our customer support team because they have all of these new issues that happen?" And that's kind of where I fell into that. So, I have my journey with the job chick, and I'm now, creating a company called Edge Pulse. We're kind of dealing with signals for funds and allocators, to kind of know what's going on. It's not just about alt data. And so we're looking at what goes on in the workforce and what is also going on with credit. Now that I'm seeing into that field, and I've been into that since 2019, I've been dealing with
Wow.
the credit side. So I've seen a lot of wild stuff, and and looking how it all works with regards to jobs, layoffs, money, credit, housing, you name it, you add it all together and you just watch these like ebb and flow patterns happen, and it's terrifying sometimes, right? Currently, as you can
Right.
imagine.
Right.
So yeah, with regards to credit, which I know, I think is a really important subject right now, especially you mentioned the student loans, and people for some reason didn't see this coming. I'm like, you checked your email, right? You do know how it works. um, but my team came to me and was just like, "What do we do? How do we deal with these people that are like, oh my gosh, my score dropped 170 points, my score dropped 80 points overnight?" They might have been even in the process, and I know a couple of them were actually in the process of getting a house.
Wow.
That's done. That's
That's
done.
done.
And,
Absolutely done.
yeah, and, and it's just like, I can't fix that, and even if you
Mhm.
paid it, it's gonna come up to the lender to decide whether they wanna deal with it or not. But this impact, I don't think many people, they're either, number 1, head in the sand mentality, which I think is honestly most, unless they were in that process of buying a house, a car, or something like that. Um, or they are just straight, not, I'll deal with it later. Or they're gonna be like, "What do I do? How do I get rid of this?" And you can't get rid of that. That was stuff that needed to be paid, and unfortunately, even for the ones that were 700, 800, they're dropping 200 points because their credit was so good. So there's this massive shock value, and people just weren't ready for that. And you're looking at this, and you got what, 90% of people, I mean, let's see, it's what, 9.7 million student loans, I think, were delinquent when they hit. You've
Right.
got that many people now that are pretty much unqualified for approval
Right.
instantly, and
Right.
that doesn't go away. That's not going to go away, and lenders aren't like, "Oh, we'll deal with it." They're not going to just deal with it, and so it's stopping a lot of people in their tracks.
Yeah, it's so frustrating to me, Amanda, because we had a couple of articles come out. Let me back up and just say, when I first started on this journey of talking about the housing market, talking about mortgage, I
Mhm.
came out of Dodd-Frank and had believed all of the credit quality gospel singing that was in the mortgage market. I had seen it, but probably around 2019, when I was working for a fintech company, I went down to a small mortgage bank And the cars that were parked outside of it were, like a Lamborghini, an Aston Martin, maybe a Tesla, but it was just all these. And I was like, wait, what is happening? What's happening? And I kind of left mortgage proper in 2019, and then went to like mortgage fintech.
Mhm.
But then I started looking at, because I do something called subservicer oversight. When I look at like the loans that are being serviced by my mortgage banks, and I
Mhm.
started, when they were going delinquent, diving into them, and I was like, "What is this?" I mean, just stuff that we would have never allowed to happen, even back in the day, which back during the GFC, and so I was so surprised, and so I had to start really diving in and understanding why were so many people confused that credit quality was much better than it was. And that's when we got a couple of articles over the last few years from the Wall Street Journal talking about it. I think Bloomberg did one as well, that we knew scores were inflated,
Mhm.
but nobody read those articles. And when I said that to people, they just completely ignored them. But I agree. I think that you know everyone was under the impression that they never had to pay anything else again, including their mortgage and their
Very
student
true.
loans. And so they put their heads in the sand, and it is shocking to me, because I remember, I had student loans, and I remember laying awake at night worrying that they would take my passport, that they would, I wouldn't be able to leave the country if I ever defaulted on those things. Cause of course, you can't bankrupt them, things like that. And so they terrified me. I don't see any of that terror, because I think they've been kind of promised that these things would go away.
Mhm. Yeah, I think, the biggest thing, and this kind of goes with student loans or really anything, including like auto loans, which it kind of just boggles my mind, because some of the situations the team throws at me is like, well, my car doesn't work, so I don't need to pay the loan. So I don't know why it's in a charge off or a collection. I'm like, I don't know how to answer that. But that is a very, very common thread. And I think the same goes with the student loans. Well, I can't pay it. Well,
Right.
you're not going to get money out of me. I don't have it. And yeah, I think a lot of it probably stems from the fact that we're not really taught credit. As we become an adult, you don't really face it until you have to face it. And,
Mhm.
so I think that puts a lot of people on a back foot. And I think the younger generations, I'm seeing a little bit smarter, but I think the student loan thing just hit them hard. I think they just got their first, kick in the teeth with it, unfortunately. And but it's wild that people, like you said, they're just like, I don't have to pay it.
Mm.
And that is a very, very common thread. The very fact that they say the average credit score is 717. I'm like, I don't know about that.
No, it's
I
not.
know I only see a small sliver sample, but it's not just a coincidence. It's the ones that are like 500 and below. Um,
Mhm.
it is the full demographic of America that any company deals with, any company that deals with credit. Same with lending and mortgages. You're seeing you're seeing the widespread, and
Absolutely.
not everybody's 717. That's the average. That's wild. I don't know where they make that up.
I don't either. Well, they do a lot of fancy footwork, right? Like you'll take Inside Mortgage Finance as a industry a publication, and they'll show, average credit scores, and then you'll go down to the tiny little type down at the bottom that says this excludes subprime borrowers under, 500. I'm like, wait,
Yeah.
but that we're talking about credit quality. Why would you exclude the most vulnerable population,
Yeah.
And so
Yeah.
what I've just noticed is that everybody's just kind of like shifted things or left things out, or and we are in mortgage specifically. Everybody looks at the Fred delinquency schedule, and that's
Mhm.
for the commercial banks, who, by the way, don't do the majority of lending anymore, and they don't hold the majority of mortgages. So no one has a full understanding of the credit quality in America, and I think that everybody back during COVID thought we were getting way richer than we are or were, and because all the luxury and luxury homes I saw being built on the road, I was like, who's going to live in these? I mean, the median income, let's be generous, is $82,000 in America. Like,
Generous. Yeah, that's generous.
and that's being generous,
Yeah.
right?
Yeah.
And and that means you can afford a home that's around 300,000 maybe, and, that median home prices are about 390 right now if you look at the National Association of Realtors. So, that's just insanity, but I think it was kind of a snow job. Like, I feel like the mainstream media has been trying to make us all feel a lot richer than we really were, so we would continue to go out and spend. And autos, it's just, you can see it everywhere. And it's so funny to me because back during the GFC, my company was kind of weird. We were not a bank, and we had very aggressive people in leadership. But when we had our consent order, that was what happened to all the big mortgage companies when, they got in trouble for processing foreclosures. I mean, that's really it. They weren't processing them incorrectly. Now, some people later on, we found out they were, but for those companies, they weren't.
Mhm.
And so, you basically have this situation where contract law was broken during
Mhm.
in the post the GFC. And I think that is where we took a wrong turn, because people no longer felt like they were obligated when they signed their name to a contract. They no longer felt obligated to perform under that contract.
Mhm. Yeah, I've
So
seen a lot of people, like, say that, and they're just like, "Well, I didn't know." That that's not an excuse.
no.
Not when you're buying something that big. So, yeah, I totally agree with what you're seeing with that. That's exactly what's happening.
So when did you first so in your position, when did you first start to see, because this I'm so fascinated about, because the Fed just came out and said for mortgage refinances, it's a 41.8% rejection rate, which is insanity and the highest since 2013. And that was for February. So when did you really start to see these impacts start to happen?
Um, you know, I think with the consumers that, the company I advise deals with, a lot of them are like, "Well, I need a house next month."
Mm,
Okay, well, your score's 586. It's not happening. And,
right.
it's so I think that's something I've always just kind of seen. I see more people are just like, "Well, I got approved." And I'm like, I don't think you got approved. There's a lot of collections on here. When the team brings it to me, they're like, "Here's the file." And I'm like, they didn't get approved. Show me
Mhm.
that letter. But I am also seeing, and this is the wild thing, I am seeing people get approved for conventional homes. There was one about 2 weeks ago. It was a manufactured home on like a big lot community thing, and it was 180,000. And they were like, "Oh yeah, it's normally 3% down, but they said I can just get it with like 0 to 1% down payment." And I'm just like, "Your score's 582." Like that was the median score for a mortgage, and she got approved.
Oh,
And
it's bad,
I was
Amanda.
like, "This is happening?"
Oh,
You
it's
know?
happening. Yeah.
Yeah, and I feel like there's a lot of that subprime stuff going on. I'm hearing more about, like, the buy down programs,
Mhm.
or, people send in things like, well, my realtor, my mortgage company that's, trying to do all this with me, they're sending me stuff just going, "No, no, no, buy a bigger home, a more
Yep.
expensive home because you'll be able to refi. Everything's gonna get
Right.
better."
Save the rate.
Yeah,
Mhm.
and it's I don't know what part of it's evil besides all of it. I understand business is business, and I get that. But this just feels a lot like before, and you're just going through these waves. So the approval rates, yeah, some are getting approved, and I think the worst lot is getting approved, like the subprime. That's
Yes.
what's happening, and I think we're going to see that problem just rear its head again very soon. And I have seen like people maybe like last summer got a house, they got approved, whatever. Everything was still pretty okay last summer, right? It's not as bad as today. But they didn't have student loans on there, so there's that as well. But people were getting approved 6 months down the road. Now that their credit's bad, they're trying to refi, and
Correct.
they've missed 2 or 3 house payments
Mhm.
since like June, August. And
Mhm.
they're 30, 60 days late. And I'm like,
Right.
I don't think you're getting refied for a better rate at
Nope.
this point. And there's a lot of other problems. And now they do have student loans. So there's a snowball, and
Mhm.
there's a lot of there's a lot. It's not deceptive. It's not open. It's not open to the people that really need to understand when you're dealing with some prime scores, um, and things like that. And that is what worries me. And looking at that with my history of the labor market and jobs and dealing with people and all of that, this is going to converge, and I think this is going to
Mhm.
converge faster than we actually would like it to. And that, let alone the FHA housing foreclosure issue that I see you talking about. That's a
Yes.
whole another deal that I can't even imagine. But
Well, I'm glad you mentioned conventional because this is what nobody believes that I've been trying to tell everybody. And that,
mhm,
it's just like the first I started talking about FHA in June of 2023, right? Nobody was listening. That's fine. But conventional is so soft. It's so soft, but everyone I know in the industry thinks it's rock solid.
mhm,
But what they don't understand is people learn how to game the automated underwriting systems. And I have seen some crazy stuff on credit where I'm just like, how did this guy get approved? Like that, I mean, he has, negative credit comments, all kinds of outstanding obligations, child support. And I'm just like, what is happening? Because this is what we promised would never happen again. And so I think a lot of my industry have been lulled into thinking because they're using the GSEs, Fannie and Freddie, their underwriting systems, so
mhm,
it's all golden, yay. And then
mhm,
and you even talk to them, and the ones that actually do want to do their own underwriting, they felt they couldn't do that because if you actually like decided not to approve an application, if it came back AUS good, you could be considered like violating, like redlining and doing all kinds of crazy things. And so
that's wild.
everybody in mortgage was afraid to reject these applications. And not to mention, of course, they're addicted to the money.
Of course.
But yeah, conventional is very soft, and I get into it well with a bunch of mortgage people because they don't believe me, and did not start out thinking this way. It's what I'm seeing on the back end, and so many people in this industry never work on the back end. By the time those loans get to the back end and start misbehaving, all those folks are long gone. And
Yeah.
so they don't understand. But yeah, so that is exactly what's happening. It's like exit liquidity in the markets. It's the last people in the door, and these early payment defaults are very concerning.
Yeah.
And it's just so sad to me because what we're doing is erasing the purchasing power for a whole bunch of people in the future. People that, they couldn't afford a home now, but they were approved. They won't be able to get a home for 7 more years,
Yeah.
or something like that. Although you may or may not know this,
Mhm.
I've seen loans originated with a foreclosure 3 years ago.
I believe that. I believe that. I've
Unbelievable.
seen things like that as well. And yeah, that bankruptcies, they're very, oh, we can just bypass that. It wasn't so bad and everything was done and it was discharged early, or, there's all kinds of things happening. So I totally believe that. But I do think a lot of people are pushing towards that conventional because they know they need their scores higher with FHA even. And there's a lot of lenders out there just going, hey, come do conventional.
Yeah.
And there's a problem. There's something brewing there.
Wow. So,
Yeah.
do you see it worsening, like, and at a faster clip, or what are you kinda seeing right now?
Um, with regards to credit slash housing, it is more of an issue now. The last couple of years, everybody, I think consumers in general, they want something yesterday. Maybe their rent's up, maybe their lease is up at their apartment or their house, and they're like, I have to get out in 2 months. Well, it's not happening. So there's still that rush, and I think we've always had that. Um, I'd say the last couple of years there was a bit of a lull. They kind of were like, I'm good. There was enough talk in the mainstream media to go, stay where you are. You can't afford it anyway. Now people want out. Rents are increasing, and they want a better life. We're past that. We're still sitting still from COVID era, right? So,
Mhm.
I think people are past that now, and so I'm seeing more and more just defiant to go, I'm doing this. And,
Wow.
and I think that is the worry that I have. And again, it just matches up with the way layoffs are going. And when you look at the time periods, how long does it take? Whether it takes, how long does it take somebody to go into foreclosure on a conventional? Right now, I'm seeing 60 days late on a 6-month old mortgage that you just got, you know, and it's just like that's a worrying sign. I had a situation yesterday, and they were like, my husband lost his job 6 months ago, so now they have like, I think the file had like 24 collections on it.
Wow.
Get it? You know, when you have a job loss, it affects you, and
Of
it's
course.
gonna be that thing. You know, that happens. That's not uncommon, and it's just life, and unfortunately, with how long it's taking to get a job these days. But they're trying to refi their mortgage that they got last April. And they're like they're like, I'll do anything. And I can't see a path forward. And I think this is going to be the case for a lot of people. You're talking about student loans. Well, if they wanted to buy a house, they're not going to be able to, because it just hit their credit so hard. But also, we need to keep in mind that people with student loans that maybe got a house in the last year or two, now they were able to get it because it didn't get that.
That's right.
It wasn't on there. They're now, possibly under wage garnishment issues if they don't start paying. There's
Wow.
gonna be pressure applied with all of that. Well, if that gets taken, who's paying their mortgage? If
Right.
their payment for student loans is getting pulled out, or maybe they're dealing with any other collections or any other things, because it is starting to ramp up a bit. I think companies are like, okay, we're doing this now. They're
Mhm.
not as lenient as they were before.
That's
Um,
so true. Mhm.
yeah, I think what we're gonna see is this slow crumble. I think it's actually a pretty fast crumble, actually.
Mhm.
But unfortunately, people are just not ready for that. And I think there's still, like I said, the head in the sand mentality. I'll deal with it when it gets there, as opposed to attacking it head on. And I really think that's important these days. And whether and I'm seeing people, even like, dealing with, maybe they were in the part of the federal layoffs, or just any getting a layoff, and they're like, I get severance, I'm gonna take time off, I'm gonna spend time with my family, I'm gonna go on a trip with them.
Wow.
And these are my own clients, and no, they're not necessarily in the same credit crunch, because I don't actually know, but we are seeing this as a whole, and they're like, well, I'm on vacation, so I'll deal with that later. Well, severance goes really fast.
It
And
does.
with how long the job market's taking, well, it's easy 4 to 6 months right now to secure a really good job, and it's, how long do you have your mortgage paid? And I think people are not thinking about that. They're just like, no, it's going to be fine. It's going to be fine. Well,
Which is wild. But
yeah,
I think what's happening in the markets right now is probably waking some people up, to the fact that it's and this administration is signaling they haven't done anything yet that is I think the most impactful thing they've done is kind of shut down the VA loss mitigation program. That is going to be impactful. And VA is about anywhere from 3 to 5% of the outstanding mortgage market. And they don't have a lot of skin in the game because a lot of them don't do a down payment.
Mhm.
But I think it's about to get. They're signaling that foreclosure is sexy again. They're signaling that they're not going to be handing out money, hand over fist like in these down payment assistance programs. And so I it's funny because I have mortgage bank clients, and this was the first week, and I have been trying to talk to them for some time. This was the first week that I saw capitulation and people admitting that there's no, that rate cut hopium, the election high,
Mhm.
the stock market bubble, like all these things kind of fueled us along. The rate cut hopium was all of last year. I mean, it's so funny when you go back and look at the headlines and the up and the down and nothing happened. Nothing happened. And then they cut rates. And of course the bond market says go pound sand, buddies.
Right.
And so, which is, I mean, right now, what's happening in the bond market is absolutely wild. So I think a lot of people thought they had options that they don't have. And I
Mhm.
just can't believe that we're all going to say things like, oh, it's nothing like what happened during the GFC. They were saying date the rate. Do you not? That's the same thing as you can just refi. Like what?
Yeah.
So they changed it a little bit. And I don't fight the last war. I look at what's happening right now.
Mhm.
But there are
Mhm.
so many what a lot of people don't understand about the GFC is that it was not necessarily low credit score borrowers, it was non-traditional products.
Right.
investor loans, arms, loans that investors would take out.
Mhm.
And so people have such a misunderstanding of what actually happened, and they don't realize that in reality, the subprime crisis kind of came and went in 2007 and 8. But then your prime bars in 2010, that's when delinquency and foreclosures peaked.
Yeah.
And so people have this real misunderstanding of what happened last time. And I've been fighting that battle on
We'll
Twitter
forever fight that battle, I'm sure.
for for 4 years. So with all of your experience in the job market, because this is when I talk to the bulls out there,
Mhm.
um, they cannot answer the labor question. Like they say things like dual incomes. I'm like, yeah, we've had dual income since the 70s, people. Like you can see women joining the workforce. That's what saved home prices in the 80s.
Yeah.
But we don't have that now. We don't have something like that coming our way. But tell us what you are seeing in the job market right now.
Um, you know, job market is not going to get better this year. And I know a lot of people are like, "Oh no, it can't last forever." I don't know about that. We have a lot of there's a lot of compounding issues with the job market, and it is affecting families. It's affecting where they live. I think this is going to hit regionally harder than we can imagine. Because if you can only have maybe one member of the household that can have that full-time job, that may relocate you. That's going to be a really big impact, especially with housing right now. I've seeing a lot more people having to moved into apartments. I speak to one of my colleagues. He's an executive recruiter in casino and gaming, and there's people turning down $300,000 jobs because it may not be the right job for them, or they don't want to relocate, or any myriad of issues. And that is insanely wild to me, but it's common. And but I do think, looking at, and I'm probably the only person that thinks about it like this, but looking at it from a job standpoint, I think there's going to be a lot of people that have to shift their entire life just to stay afloat with a new job. Most people are not woken up to that reality yet. That should come probably Q4, Q1 next year, I would imagine, because I think a lot of this is really going to start converging late Q3, beginning of
Mhm.
Q4 this year. um we can't stay in this infinitely forever. You have to take the job, and I think there's going to be a lot of relocations, which I'm sure you would be able to understand more from the housing
Mhm.
side, what implication that really has. Especially if foreclosures start ramping up, anything. I mean, the rates don't seem like they're coming down anytime soon. We have this credit issue, and and there's a lot more jobs out there that require credit checks these days.
Mhm.
It used to just be financial. Now it's
Mhm.
professional services. Now it's customer facing services. Now it's anything that's community oriented. It's a lot more jobs, and there's still a push of people looking for federal jobs, regardless of the cuts. It's more cutthroat now, but they are looking for this like perfect credit. So job market, the credit, the housing situation, again, it's all just going to converge in this really weird melting pot, I think. And
Mhm.
I don't really know where it's going to go from that, because it just
Yeah.
looks like a big mess to me right now. From a company standpoint, from a job standpoint, it's just going to get harder. And there's jobs out there. People are getting hired every single day. And I always say, despite my doom and gloom, with everything, I'm reporting what I'm seeing. I'm reporting what is actually going on. But the fact is, there are jobs available. You just need to be able to work it a very different way. And
Mhm.
credit being available is going to be a major factor, because a lot of companies don't actually pay for relocation these days either.
Wow. Yeah, I mean, I've reload all over the country. And several times and had it paid for, several times. So if they don't pay, I agree with you. I think we're going to see a lot of reverse migration. And I think folks have just I mean, I see it all the time with certain cohorts of the millennials, Gen Z, their relationship to work is very different. And this is where being a Gen Xer, like I'm good if they come and they say, "Hey, we're going to build a high speed rail,
Mhm.
I'm good to go be a project manager there or get my hands dirty, like,
Yeah.
because that's I've worked every kind of job there is out there. I
Yeah.
started washing dishes when I was 12 years old, for pay. And so, but they aren't like that at all. And a lot of them didn't even get high school jobs, and so they don't really understand what you have to do to keep a job. And in fairness to them, I think many corporations have broken the social contract. I was very loyal to all of my companies, and I have no idea why at
Yeah.
this point. They were not loyal to me in any shape,
Yeah.
any, way. And so I do appreciate their perspective on that, but when it's time to pay the bills, you aren't going to get a lot of choices. And honestly, you know, I I know there's a lot of drama right now around the tariffs, and I'm the kind of person that I have to wait and see what's noise, what's not noise, what's actually going to happen. Is this just a big, people fighting in the media, power jockeying for power? Like, what is all this, right? And
Yeah.
I've seen some memes of, people sitting and like at sewing machines or
Yeah.
things like that. And I that really kind of bothers me because I think that as humans, we're supposed to work. And number one, I don't think that's the kind of jobs. I think bringing manufacturing back is going to be bringing back. It's going to be a lot of it's automated. It'll be the jobs around that, like project management, like those types of things. But leaving corporate America really, changed my perspective about all of this because during the GFC, I really spent a lot of time at work, and I feel like I lost many years of my life. And then, was essentially when things didn't go a certain way, um, we had a new ownership and things like that, that didn't really care about all those hours that we'd put in. And I could see the writing on the wall. I was one of the first people to leave after our bankruptcy auction happened. So, I look at the way the social contract has been broken. Back in 2019, I was probably doing the job of three people and not getting paid. And so I can see why so many people are just so burnt by what happened. And then of course with COVID, people got, cut overnight. Didn't matter if they were there for 20 years. So, what do you think is driving what I've seen is a lot of people during COVID were looking for passive income, right? They wanted another way to make money. But
Mhm.
do you see it the same way as I do, that perhaps they were just tired of being taken advantage of the corporations they worked for?
I think that's a handful of people. I think the media has fueled the rest.
Mhm.
Just watching, dealing with people looking for jobs over the last 20 years, I've seen the patterns, I've seen the changes, the mindsets, back in, during the GFC, everybody was like, well, I'm not doing this until I get a management position. Okay. They tried to have the power. And, so there's different aspects to it all. And I think, after COVID, they got so happy just having, $4,000 dropped in their lap every month. They didn't really need to work. And then I think the media fueled a lot. I, there's a lot of I think it's a very split
Yep.
mentality. The ones that are like, no, work, work, work. And I would say a lot of those happen to be Gen Xers, the boomers. They're doing that. And maybe the older millennials. And I think we have that change. Like you mentioned, there's a different work ethic, there's a different work mindset. I guess that's probably the better word, mindset, in how it should be. I The issue, with everything changing and, very, very speculative to say, but, this whole concept of bringing in manufacturing possibly or anything, I don't think it's not a case that, people think we're just going to be like laborers in a manufacturing facility like those
Right.
memes that we've seen. But, there's a lot of companies out there building automation and
Hmm.
and building those robots. So yeah, it's not happening today, but in the next 10, 15 years, are we going to see a lot of that? Yes. That's going to change the structure of jobs,
Right.
and nobody is ready for that. If you're talking 10, 15 years, you're talking about Gen X being on the out, getting ready to be on
Mhm.
the out of their workforce cycle. um it's what, in 10 years, 60% of the workforce is going to be Gen Z and millennials, which is wild because I'm not that old and I don't know how that's possible. But, when I think about it like that, there's a lot of aspects. So, what are they learning? And you have to kind of look at that. What are Gen Z and millennials doing to be able to manage and be those project managers or those other jobs out there? Because I'm not seeing that experience being built now, but it's
Oh,
not a case that you could just be dropped in it 10 years from now, when
no.
things do change. And that's a worry I have. Like, it doesn't keep me up at night, but it kind of just makes me go, what's happening? Because universities aren't changing.
No.
That whole mindset isn't changing. And it's going to affect everything from how we live and housing and credit and where you live and what goes on and our spending patterns. And you know nobody thinks about jobs as being the core reason of why everything falls apart, and it really is, whether it's because you don't know how to get ahead in your career or companies lay you off because at the end of the day you're family until you're not.
Mhm.
So people just need to really realize that you got to keep pushing and keep pushing
Yeah.
further in your career. And
Keep
I think,
learning.
yeah, exactly. And keep looking for a new job, keep looking for a
Right.
better job.
Right.
And I feel like a lot of companies are going to start, the last couple of years there was, very cushy salaries for jobs that you're like, I'm sorry, they're getting paid what for what? um
Exactly.
when everybody
And
is
they're
like,
playing foosball and drinking, matcha lattes and things like that. Yeah.
exactly, that's not, really like, career growth. But I think a lot of those cushier jobs are going to be dropped, not necessarily that they won't exist anymore, but I think the pay is going to go down.
Yes.
The job, it's going to change. And again, I think all of it is just going to, it's all going to come together. And like I said, I can't see what's past that mess, but when you have all these other issues from credit to housing, the mass layoffs that happen these days, let alone bringing in buy now, pay later and open banking and what that
Right.
does to people.
Right.
I can't even imagine what this is going to look like, in our companies, going to some fintech conferences. I know you're in fintech, going to some fintech conferences, they're talking about open banking being associated with companies as well, as part of your credit check. Well,
Mm.
that's not great. They can see
Mm-mm.
spending habits, they can see what's going on. Are you going to be a very stressed employee? That may not be looking like really good for you. So there's a lot of things people aren't thinking about yet, but it's also not really out there.
Mhm.
But there's a lot coming. That's
Yeah,
for
I
sure.
think so many people look at that unemployment rate and they don't understand, like right now we have the highest multiple job holders that are working 2 part-time jobs than we've ever had in the series history, and it goes back to 1994. And so, I think there are some jobs out there, like you're saying, for those people, those go-getters, those pushers that, and then unfortunately for kind of the lower end of the K, they're having to work 2 jobs to try and make ends meet.
Yeah.
But I think, being in fintech, what people don't understand, and this is why that meme kind of bothers me,
Mhm.
is we have not figured, I mean, there's going to be a need for people who actually, what was fascinating, what happened in tech is everybody got super specialized. And so when I was starting in tech, I was a network administrator. I taught myself everything, just bought a book. And but I could understand the entire ecosystem. And
Mhm.
that's what I thought a network administrator would do. You then fast forward 10 years, it wouldn't matter what job I was in. If I was in corporate financial planning and analysis, if I was a project manager, somehow I got swooped up into every technology project because no one could figure out. You would get the router team on with the database team and none of them could figure out what was and it was crazy. And so I think we've lost a lot of specialization that we need, and what we're going to need a lot of is people who know how to make software and hardware talk. And those people are very
Rare.
few and far between. But that's and so I watch America This Week, which is Matt Taibbi and Walter Kern.
Mhm.
And recently Walter Kern, who had gone to Washington, and he's been uh, you know, he's theoretically he's in the know. I can't say for sure, but he talked about there's going to be a carrot coming, that it's not just a stick, that the carrot's going to be a lot of these Midwestern universities like, Penn State, University of Ohio. there's going to be programs for engineers
Mhm.
and to train the workforce because they are not prepared. I mean, we've lived in hyper financialization, right?
Mhm.
um and then the other thing that concerns me is that all the jobs I had when I was like very young were the jobs that taught me how to be a good employee, like those grunt work, where you're figuring out how to do something for the first time in your career and there's nobody to help you, and you
Mhm.
just
Oh.
you gain so much confidence doing that. And this is what I see, not and if AI takes a lot of those grunt jobs
Mhm.
away,
Mhm.
then I feel worried about Gen Z, Gen A, that they aren't going to have that confidence. And so I think about this constantly, but I do think that there's a lot of drama in the media and and of course it's politics, but it's all about power and
Mhm.
control. And I just hope people understand that things have changed. Things are changing daily.
Mhm.
And it's time to take your head out of the sand and
Yes.
realize that you're going to have to do things that make you uncomfortable.
Mhm. Yeah, 100%. Yeah, we've got to start looking at it. I really hope, like you said, maybe some of this stuff currently happening will make people wake up at least enough to start making that change. And I don't know. I don't know. There's a lot that's still going on, and some things just boggle my mind when I hear it. And and I think we'll always have some degree of that. But everything needs to get stable, and I think once everything can like stabilize a little bit better,
Mhm.
that will help people. And I don't know when that's going to be. Hoping it's sooner rather than later, but because that's going to help companies know what to do and get their hiring plans back in order, and start building that pathway forward, which will allow consumers, allow job seekers to know what to do as well. And fingers crossed that's soon, right?
Yeah. Do you so one thing that I remember when I got my MBA a while ago, probably 15 years ago, we were already studying about short-term return and what that was doing to companies. The fact that they weren't investing in research and development, they weren't investing in their employees. Instead, they were doing buybacks. And I think that has really destroyed creativity in the United States. And I am hopeful that we will get there again. I was reading something from Dr. Pippa Malgrim, is someone I follow, and she's like, we she sees that we're moving from corporatism to kind of more smaller businesses, creative businesses, not just unicorns, right? What
Mhm.
has happened to all the unicorns? I mean, dear God, what a disaster.
It's
Um,
chaotic, yeah.
and so,
Mhm,
I'm hopeful that that is true, that we can start, investing in small businesses again, because I truly believe that's what makes America great. It's not Google and Amazon and Meta, it's the small businesses. And I think that what we've suffered from in this country is that believing that everybody lives in New York or California, like, and
yes.
that's just not that's not e and I spent 7 years in New York City. I mean, I lived there. I remember, And
Yeah,
so it is very, very different. But I know what probably would have happened to me if I had stayed in those rarefied halls. I might be one of these useful idiots right now. But this is not what most of America wants. And I actually watched the Scott Bessent interview with Carlson, and he talked about this one rally, I think it was in Pittsburgh, where it was, all these folks who are super rich, as
mhm,
well as the folks that had, like obviously Elon's the richest man in the country, but
mhm,
also just these folks that had their families with them, these, steel workers, and the things that they care about are, little league. And where I live in Johnson City, Tennessee,
mhm,
absolutely. But it's not just because I only care about little league. I care about what I'm teaching the child that I have, responsibility for,
mhm.
and teaching her teamwork and teaching her how to, get along with others and not. And so I feel as if the elite have really looked down on most of America. And I heard, and I can't verify this, but I heard that the former administration's strategy was compromise. I'm sorry, to compensate the loser.
Oh,
And
wow.
if that is true,
Wow. I've not heard that. Oh my gosh.
I I don't even know what I studied Marx, and that
Mhm,
sounds like very much something that would come out of Marx's thought,
mhm,
and it is wild
mhm,
if that's true, then,
mhm,
in America, guys, get your head out of the sand because these people do not have your best interest at heart. They are happy, for you to be, to basically live in learned helplessness, right? And
mhm,
so I think there has to be more motivate like, people are gonna have to get a little more motivated. So I it's all very and I again, it probably sounds like I lean right. I'm very much in the middle, but I find
mhm,
all of this very fascinating, just in terms of the narrative has shifted so drastically from Wall Street to Main Street. And I that is now whether that plays out, I mean, I'm always a skeptic on these things,
mhm.
but if we really are making that transition, I think this is actually an opportunity. And, people are freaking out in the media, and I just encourage people not to freak out, right? Because this is a power grab of people that you and I will probably never even talk to. Do you know what I mean?
Exactly, exactly.
So
Yeah, yeah, it's wild, I think you're right, America is small town America. I traveled for 4 years, permanently, and it was, got to see all of the states and lived in all of the states during that time, and it's not New York, it's not LA, it is real people. So that
Mhm.
statement that might or may not be true, is really wild to think about, but, yeah, there's I think people just need to not focus on the headlines. That's not
Right,
the story. You
right.
know, speech writing is a hobby of mine. I love the way narratives play out.
Me
No
too.
matter which party you're looking at, you're just sitting there going, "Oh
Yeah,
my gosh, that's a genius." Even if you don't agree with it, you're just like, "Wow."
yeah,
But we have to stay away from those headlines, from that narrative, that speech writing, and just put our heads down and get to it. And as consumers, as job seekers, as Americans, we will get so much further ahead individually and as a family unit, as household unit, however we want to look at it, if we just focus and stop worrying about people bickering, on Wall Street or in the White House or whatever it happens to be.
yeah. I totally agree, and I often talk about it as the forgotten American. It's those in the middle who are
Mhm,
working hard, who are paying their taxes, who are trying to do everything right
mhm,
that have been totally forgotten. When I was out in LA
mhm,
recently, looking at Skid Row, looking at that labor market, and what is so sad to me, Amanda, is that the jobs that are left are the ones to service the rich
mhm,
or to service those who have been relegated to the sidelines, those that were addicted, homeless, in detention centers. I mean, there's so much public private, partnerships out there that are
mhm.
all about getting the private super rich and, of course, kickbacks for the public side of it as well. And it's not about the American people. And to see our labor market be about, mowing the rich's lawn or just servicing and not servicing them in a way to get them out of addiction, not servicing them in a way to get them out of homelessness, basically servicing them in a way to keep them in the system because that's how you get paid. And I
Yeah.
find that very, very depressing.
Yeah, it's disturbing to think that that's what it is, and yeah, I mean, listening to you going there, and after traveling, yeah, I mean, I saw the same things. I didn't go into Skid Row, but I have been in those areas that you saw that, and it is terrifying. I was able to do that. When we traveled, we took our kids, so they got to see what real life looked like, and
Wow.
and that really matured them. They changed a lot of their mindsets, I think, with everything.
Mhm.
They were able to see what life was. And
Mhm.
it isn't all shiny New York skyscrapers at the end of the day. And, what goes on, we need to know, but we also need to focus on, individuals and let us do that, but be aware of what else is going on and help where you can.
Yeah. I often say we need to vote with our dollars, because, a lot of people think our votes don't count, I think they do. But
Yeah.
in reality, our biggest vote is how we spend our money.
Mhm.
And honestly, that's where we have the most power as consumers because 70% of gross domestic product is consumption.
Mhm.
And so they need us to spend, they need us to become date and who's they? I have no idea, but that is the
They.
culture.
Yes.
It's the they. Everything is about spending, spending, spending what you don't have, and that's how you continue to drive GDP. But in reality, we have not. You look at the average year-over-year growth in GDP since 2000. That those averages have been going down, and so we've never gotten back. We've never recovered really from 2000, and especially not from 2007.
Mhm.
So I often talk about that we're in a silent depression that was coined by Emil Kalinowski. Um, but I think the media has done a really good job of keeping us divided at all,
Mhm.
and also hiding how much distress there is at the bottom of the K, in the middle of the K. The University of Michigan Consumer Sentiment Survey last month, we got the preliminary today, which was not great, but
Yeah.
last month you just saw that top income cohort just it joined the bottom of the K and the middle of the K. So with all that being said, if there are people out there right now that are worried about their credit, do you have any tips for them or things that they could do
Yeah.
to kind of help?
Yeah, don't ignore it. It's not that you have to answer every phone call, but go through it and figure it out and make amends on dealing with whatever's going on with your credit. If there's collections, then deal with them, because the more you deal with them, it's not necessarily going to change your score today, but the more that gets compounded, it's just not great. Buy now, pay later, I think is going to be a complete disaster. Avoid that at all costs. Seriously, that stacking ability is going to kill your DTI. Don't ruin your chances when you're trying to fix things, when you're trying to get ahead. So yeah, I think it's a case with credit. Don't ignore it. It is what
Right.
it is, and we didn't ask for it, but it is what it is, and we have to deal with it. And the more you can be on top of it, the stronger of a consumer buyer and chance you're going to have. You're going to be just you're not going to be stressed either. Well, I mean, you will be
Right.
stressed, maybe, but but it won't be as bad as ignoring the situation and wondering if that knock on the door is going to be a lawsuit or some kind of a summons or something like that. Because a lot of people are worried about that. Don't go through that stress for no reason.
I totally agree with that. Deal with it head on. Don't ignore the phone call. But if you don't like talk on the phone, you can email them. But a firm is about to start reporting to credit, and that is not going to be good for anybody. And that sector has increased exponentially since 2021,
Mhm.
and I'm sure we have no idea really how big it and how it's impacting folks. But I mean, in my bank account, like, I'll make a purchase, let's say for, an airline ticket, and I don't use credit cards, and I know everybody's like, "Get the points." I'm like, "Nope, just not gonna do it." But on my debit, in my bank account, it'll say, "Do you wanna split this into 4 payments?" I'm like, "Are you
Mhm.
insane?" I mean,
Mhm.
that's insane.
Yeah.
And that's, a
Common.
big bank.
Yeah.
Yeah. So I just feel like we have gotten so far afield of sound financial practices, and I agree with you. One of the things I'm most passionate about, because I never had it, is financial education, because so many people have no clue what an amortization schedule is, or how these things can really impact them in the future. And it's just this extend and pretend. I think this is going to be a real wake up call, and like you say, I think it's only just beginning, like, but it could accelerate faster than we expect, because just like home prices rose very, very quickly and faster than anyone could believe,
Mhm.
these types of things can happen quickly on the way down as well. But folks are just always either fighting the last war or just completely with their heads in the sand. So,
Mhm.
yeah.
100%. 100%. Yeah, yeah. I think approval rates, so I think we're going to see them drop a lot. The whole thing with the firm, that's now short term loans going on your credit as well. And when you look at that, whether it's, you're stacking them and maybe you've got like three or four and you're just paying off these small amounts and you're paying them every month, but it's on there. That totally kills your DTI. And that
Mhm.
financial education is something, the company I advise, they're really big on. It's about building, but it's about
Mhm.
building credit. It's about looking at, financial health and moving
Right.
forward. Yes, deal with the problems, but how do you get past this? What do you need to know? And it's all stuff we were never ever taught.
Right.
No matter what, no matter what class you took in college, this
Right.
just wasn't the norm. You weren't taught this. So that is really important to understand how things like a firm, while it sounds really great, and I know the whole joke is, you're buying a burrito, on credit like that, but the concept of a firm is, yeah, I don't know how they're in business from long-term loans. I'm telling you that now, just seeing what I see on credit reports. But this short-term issue that's gonna be taking place, and they're gonna be putting that on there, that does not look good. And, whether that doesn't look good for jobs, housing, car loans, whatever, they're seeing that you're strapped for cash. And that does not a very strong consumer, that doesn't make you a strong consumer. That doesn't make you a strong point for lending for anything. When they go, oh, they bought $150 pair of Nikes on a firm, and yes, they paid it, but why'd they have to make payments?
Right.
And now they want a car, and
Right.
cars are what, on average 700 plus a month now. So it's like that doesn't make sense. So you're number one, either going to get not approved, or your interest rate's just going to be stupid. And
Mhm.
it's hard to look at. It's hard to see what's coming.
Yeah.
I don't think we'll see the buy now pay later disaster in the making really hit for about a year or so. But
Yeah.
I think a lot of things have to change with all of that, and people will just see it. And I think the scores will come down. The average score of 717, I think, will come down with all of that.
Mhm.
But yeah, it's wild to think about, to just see all of it happening at the same
Yeah.
time. And
Well, this has been fantastic. But before you tell us where people can find you, are there any last words you want to share for folks out there that might have suddenly woken up to this massive drop in? I mean, going from a 700 or 800 to below is a huge ego hit as well. I mean, in the United States, we live and die by those credit scores. So, any advice or any last words? It doesn't have to be on that topic that you would like to share.
No, it's a good topic. Yeah, 9.7 million people are getting hit with this, with the student loans. So yeah, if you see that, it's something you need to start taking care of right away. And you can help it from getting worse, because it's just going to keep getting repaid late, reported late, and you don't want wage garnishments. So focus on taking care of it. That is a big shock to wake up to, and seeing some of the messages I've seen going, well, what happened? They didn't even know that was happening. So go check your credit scores. You can go get a free free credit report from, like, what is it, annualcreditreport.com or something.
Mhm. Yeah.
Google it, you'll find it. Go check what your credit is and know what it is, because whatever life whatever happens in life, you need to be aware of what that is.
Mhm.
Even if you're just looking for a job, you want
Right.
to be aware of what your credit looks like, to companies that may be looking at this, to see whether, you're going to be a stressed out employee because you have financial issues, or there's strapped issues, or you're going to be one that they can trust. And that is becoming more common. And that's not talked about, but be
Mhm.
aware. Just be aware of your credit.
Yeah.
Check your credit score.
That's
That's what
amazing.
I would
That's
say. Yeah.
Thank you so much.
Yeah.
So, again, this has been fantastic. Tell us where people can find you.
Yeah, I'm on X, at the job chick. That's probably the easiest way you'll find me. I'll be sharing a
Awesome.
lot of melody stuff because it's awesome.
Oh, well, thank you. And,
Yeah.
thank you for what you've been doing out there. You've done a lot of great tweets. And so I encourage everybody to follow her, and I'll put her details, in the show notes. But Amanda, thank you so much. And everyone out there, thank you for joining. Um, Going to try to put out more of these types of videos just to tell you what's going on, and to also stay calm, because things are crazy in the media, but in reality we don't have a lot of information yet. So stay calm, press forward, and we will see where this goes. But people like Amanda and myself will be here to give you advice and words of wisdom, because we have been through a lot. So thanks everybody for joining us, and we'll see you again next time.